Good day, this is Shauna Casey, and welcome to this SOS educational webcast. Do this, not that. How do your procedures measure up? Due to the large number of attendees, no conference call service is available for this webcast. The sound will broadcast through your computer speakers. However, if you wish to ask a question at any time during the presentation, please feel free to type it into the questions and answers panel of your GoToWebcast console, and we will do our best to answer them as they come in. Any questions that we don't get a chance to address during the webcast, we will follow up with afterwards in an email. This morning we sent an email with a link to the presentation materials to everyone that registered as of 10 a.m. Pacific this morning. You can also find the link to the materials under the Event Resources tab on your GoToWebcast console. This session will also be recorded, and we will send a link to the recording and materials in the next day or two. I hope that you all are familiar with Stock and Option Solutions, or SOS as we are more commonly known. For those of you who are not, SOS is a leading stock administration, staffing, consulting, and outsourcing firm within the equity compensation marketplace. SOS provides interim and permanent placement, expert project resources, and total outsourcing solutions. To learn more, you can visit us online at www.sos-team.com or call us at 408-979-8700. Next, I'd like to introduce you to our speakers for today's session. We are pleased to have Catherine Randall and Laura Kreman on the panel today, both from Stock and Option Solutions. And next is our standard disclaimer slide. We'd like to remind you to consult your own advisors before making any changes. Thank you all for joining us today, and with that, I will turn this presentation over to Catherine, who will introduce our topic and cover the agenda. Thank you.
Good morning, everyone. My name is Catherine Randall, and we are here today to talk about best practices. Now, we hear a lot about best practices in equity compensation, but what exactly does that mean? What are best practices, and why do we care about them? How do they apply to our processes, our procedural reviews? How do they apply to software, audits, and our mindset as stock administrators? Today, we're going to explore this, and then we're going to open up the floor to talk about questions at the end.
Hi, hello everyone. This is Laura Kreman. So, first things first, what are best practices? We get this question all the time and decided to share the true definition from Webster Dictionary to start us off. Webster Dictionary defines best practices as a procedure that has been shown by experience and research to produce optimal results and that is established or proposed as a standard suitable for widespread adoption. Catherine?
So, why do I care about best practices? With best practices, what we are doing is we're using our own experience and the experience and knowledge of others to develop processes and practices that will help us avoid problems. And why should these be included in our day-to-day administration? Well, clearly the worst problems we are focused on is avoiding any restatements, tax complications, securities law infractions, and any SOX noncompliance. The benefits to using best practices are a little less obvious, but when you use well thought out best practices, it will support and maintain your compliance. It'll mitigate your risks, improve efficiencies by helping to filter out many of the mistakes and problems that can be so time consuming to fix on the back end. Best practices are basically a map to help you do it right the first time.
All right, we wanted to start with discussing the process and procedure reviews. We know they're dreaded. It's the dreaded process and procedure reviews, which so many of us have a hard time making time for. But it really is important if you want to avoid it's always been done that way, and have the opportunity to reap the rewards of the benefits that Catherine just outlined. So what we suggest is schedule time to review your processes and update your procedures. We all know the ramifications of outdated or non-existent documentation when errors happen, or worse, your stock plan administrator or one of the stock admin team leave and someone is left having to figure out, what do we do next? I learned this the hard way. Many years ago, I was with a company where we managed all of our stock administration in-house using basically homegrown software. It was developed as we needed it. Prior to our IPO, we outsourced, moving to an equity platform, which did require some customization to fit our needs. There were some errors with our stock option exercises when we first started, so what we did is we dropped numbers literally into a spreadsheet to recalculate. The problem eventually was fixed, no problem. What I didn't realize was that my team had built this into their procedures. I came across it one day and asked, why are you guys doing this? Well, because there were errors. I asked when, thinking, oh no, it started again. They're like, oh no, 2 years ago. I was like, oh, great. Okay, let's remove that step. Again, nobody had thought to ask. I hadn't reviewed, but 2 years worth of inefficient stuff that we didn't need to be doing was still moving on. So put your procedure reviews on your calendar just like you do any other requirements, whether it's to be quarterly or annually, done by you or your team, one procedure at a time, just make it happen. All right, if time is limited, start with focusing on your manual processes. In addition to any adjustments that are being made outside the system of your equity platform, know the potential risks, what may be affected. Are we going to miss a deadline because it takes so long? If we fat finger a number, will it result in an accounting error? Look for opportunities to automate, whether it be internally or with your outside vendors. Build your case as you go so that you're ready when an opportunity arises. I often get asked about automation and what do we see most companies doing these days, especially when resources are limited. We know how you have to get in the queue with the IT folks to make change. I will say most that I see shoot for automating the employee demographic updates from their HR and payroll systems. The benefits of doing that are so often significant, ensuring that employee information is always up to date. It can eliminate the need to update tax information in the stock plan system before options are exercised or restricted stock is released. It also streamlines some of the steps involved in the termination processing. Anything that can make it easier, more efficient, less room for manual errors is always a positive, so keep that in mind. The other thing to do when you're reviewing your process and procedures is review your cross-checks. Make sure that those formulas that you put in place to catch errors are still correct and doing exactly what you need. Lastly, ask yourself if the process is still needed. I gave you the one example. Here's another example. We have seen multiple clients scrambling at year-end to pull together year-end statements to send to all the employees. They originally started doing this to meet their Section 6039 compliance requirements and didn't realize that it was no longer necessary when the Forms 3921 and 3922 were implemented to report the ISO and ESPP transactions. When we pointed this out to them, they were shocked, stopped sending to all employees, and basically when employees said, wait a minute, we're used to getting those statements, we pointed them to their access to their online accounts. They can go on and get all that same information. Saved a huge amount of time and a lot of stress, if you will, at the year-end time frame. All right, cross-functional collaboration. That's another important one. As we all know, stock plan administration is the team that seems to work closely with multiple departments, whether it be human resources, finance, tax, corporate comp, payroll. Periodically, those interdepartments, those team players, their requirements change, and they don't always think to tell us. How many times when someone new comes on board and asks, what do we do with this report? And nobody seems to know. Sometimes the answer is, we've always received it, and we save it here, just in case. So, suggesting communicate and understand what they're using your equity data, the data you're responsible for. Recently, our team was working with a client. They were providing the HR team 4 different reports. HR was then taking it, pulling data from all the reports and creating an elaborate spreadsheet to combine, massage the data to get what they needed for comp committee presentation. When we understood what they were really doing and why, we were able to customize the report within the equity platform. It was a win-win. They got what they needed, minimized the risk of errors from the manual manipulation they were doing, and the stock admin team reduced their time filling those requests that frequently came in. Just another example. Other thing is know your equity platform and pay attention to updates or enhancements. If you don't know if it's going to affect you or even be beneficial to your needs, talk to your client service rep. They're working with you. They know your data. They usually know your programs. Get some suggestions. Ask those questions. This may be a perfect opportunity to eliminate some of those manual workarounds. Another reason to be aware is sometimes updates lead to something else breaking. There's been times where a report no longer worked. It was just something that hadn't been thought of or something happened. And of course, it's exactly when you need it. So just keep those things in mind. In addition, don't forget reviewing your employee communications. How many times do you just update what's been sent before add the current dates, add the limits, add the deadlines, because you don't have time, got to get it out quickly, or you really don't want to have to go through legal review again. You know how challenging that can be sometimes. But sometimes it's worth it, especially if it helps to educate your participants. An example, when ESPP enrollment is opening, stop. Think about the questions that you routinely get, add it to your communication. It may not stop everybody from calling, but it may limit the calls. It may also provide for a better user experience for your participants. Also, keep an eye on your vendor communications, their training opportunities. Sometimes employees don't pay attention because they think it's spam, but if you point it out to them, put it on your intranet, send it out in the communication, they may actually take advantage of it. So in summary, best practice is to schedule the time. Force yourself to review your process and procedures regularly and check in with your business partners on their changing needs and requirements. All right, Catherine?
Now we're going to talk about software systems. Now, software systems are often the turning point of where something can go wrong, often without you being aware of it until it's too late. This is where you need your best practices to filter, your best practice filter to catch those issues before they become problems. In the old days, we used to download the software onto our computers, and we knew it was not going to change unless we did something to it ourselves by applying a patch or doing an upgrade. With the current software as a service model, we can't always be sure that nothing has been changed without our knowledge. And with all of the automation of the data flow back and forth, we are much farther removed from the data, and possible errors can snowball into problems. So we really need to keep an eye on this. This is why I developed my mantra of never assume. We do not assume that your system's reports are calculating what you believe they should be calculating. All the softwares and all the reports are not created equal. You need to know what your software thinks, and you need to know what your reports are calculating for those final expense numbers or for the capitalization tables. You need to know what data the system is using for its calculations. What fields is it pulling from? And what fields is it not taking into account that maybe you assumed it was? You need to know these things. Do not assume that the report headings must mean what you think they should mean. Look it up in the help section or the manual, or better yet, do your testing. Different softwares can use common keywords differently, and that can really throw you off. Do not assume that all the filters work on all your reports. This one's a biggie. Test it before you depend on it. Example, if you need to filter out grants resulting from a merger from a forfeiture rate report, don't assume that the report's group filtering is working. You need to actually test it. I've actually once went to a conference and I saw a room full of controllers break out into a cold sweat when they learned that the filter didn't work on the forfeiture report the way they thought it did. So always do a quick check, even if it's just, sample 3 or 4, just to make sure that it really is working the way you think it's working. Do not assume that your reports will not change. Again, in this software as a service model, software coding can be changed for somebody else without your getting prior notice to this. Your best practice is to never assume and regularly test your report findings for the important things in Excel. I know you're all groaning, but it's true. Connected systems can make changes that you're unaware of, and these will often show up in important export errors. Some changes to be watching for might be any kind of account groupings or sorting fields that you depend on for payroll reports or for accounting and expense filtering. Data input errors in other systems can cause problems further down the pipeline. Know what those are and watch your error reports for those indications. Especially some softwares these days for HR have the employees entering their own data. And foreign language characters can cause chain reaction errors all the way down the pipeline, which can cause grants failing to upload. Another example was I once had a systems change at the brokerage that when combined with my regular software uploads, caused all my non-employee directors' RSUs to error out and disappear from the brokerage system. And this was about 5 days before a release. Thankfully, I regularly do my error report checks, but 5 days before a release is enough to give you a heart attack. Thankfully, it's also enough time to make the correction. All of the automated systems have error reports. Create a process for reviewing those imports and exports for errors and follow up on finding solutions for those regular errors. Make a list of your common errors and see what you can do working with the other systems to eliminate as many of these as possible. Make a regular schedule for testing your frequently used reports. Read the update notices from the software. I know it's always one of those annoying things we're going to get around to doing, but you really do need to make the time. But don't count on all of those notices to cover all changes in your software. Create templates and cross-checks between your reports. Set up a template to check your taxes for a sample of the for an example, RSU releases. I want to make sure that all the taxes are being calculated correctly and all the correct year-to-dates are being used. So just in case, I'm going to take a sample, maybe 4 or 5 people, prior to the release, and I'm going to create a quick tax template, and I'm going to manually recalculate those taxes, just to make sure that the software is functioning correctly and the correct year-to-dates are being used. You'd be surprised how often some of the year-to-date uploads can error out, or there's various settings in the software that can make changes to the year-to-date after you've done your upload. Very often, I will admit, I do this template for my insiders and officers because I especially want to be super careful that their taxes are going to be perfect the first time. So I do that manual check on the taxes. Take an example of, another example would be your expense calculation reports. Test it out in Excel so that you know exactly what kind of formula it's using for its calculations. Once you've created your test template, you can use it for quick quarterly checks on your reports to make sure that the report hasn't changed anything. This happens to be very handy also for any kind of questions from your auditors. You've already got it tested out in your pocket, ready to go. It's a wonderful thing. So your best practices is to prove your system reports and data transfers are accurate and schedule periodic retesting to make sure everything is staying accurate. Once again, once you set up these templates, it's easy to continue testing regularly. It'll save time with researching and resolving issues in the future. And I'll turn it over to you, Laura.
Okay. Data and compliance audits. All right. I'm sorry, my slide's stuck there. There you go. Audits. We all have them, whether we like it or not. The key here is to review them periodically, just to ensure they're meeting your needs and that they continue to service the purpose that you originally intended, or that they're modified because things change. Manual processes. If any of your manual processes become automated, you may not need to do some of the audits that you've been doing. Or I should say, at least once you're comfortable the automation is working correctly. I think, Catherine, you pointed that out, just to make sure. Better to test than not test. Peace of mind, if anything. Anytime there are errors, they do happen. Step back and review. How did it happen? Is there anything we can put in place to ensure it doesn't happen again? Was there a breakdown in our controls? Be proactive, not reactive. That's the benefit of the audits. Changes to regulatory requirements or tax laws. We know those come down the pipeline all the time. What do we do to update our audits or put new ones in place to ensure they're actually remaining compliant with those changes? All right, data audits. This is the first type of audit that we want to talk about, verification of data. Are these numbers accurate? Most commonly seen audits, let's start with terminations. Always be on the lookout for the missed or late notifications, termination date changes. Sometimes audits have to be designed differently. For instance, I worked with one company where they made a change and they started having line managers entering termination dates directly into their system. It was extremely challenging, as you can imagine. And HR frequently, or I should say regularly, did late updates and corrections. And we know when those late corrections come in, the steps we have to take to manually adjust, reinstate grants, or I should say cancellations and everything else. It's quite challenging. So the timing and frequency of that audit in particular, we had to change it, and it became even more critical to ensure we were getting our equity balances correct. Next type, auditing equity grants. One of the things here that I've learned is make sure you get the final approved documentation to do your verifications, not the draft that goes to the board or the comp committee for approval. Understand the approval process of your corporate comp team, your HR team. Understand what they're doing, especially if there's new players that join the team. Make sure you're getting the information you need to do that verification. And it never hurts to ask or get that final word of, did you send me this? So that, again, the auditors come around, where's your verification? Did you do this control? You've got everything right there, and there's no oops, gotchas. All right. Let's see. Another regular audit is for year-to-date wages and the tax withholdings. Your audits can really vary here depending upon whether you have automated feeds or if you're updating manually when there's any types of transactions. So, build your audit the way it meets the requirements to test that information. And then, of course, there's the audit of the account information. Suggestion is understand the use of the information. That's so important to your audits. For example, accounting sets up expense using a specific field, such as your departments, divisions, or your cost centers. Are you auditing that field periodically as it comes from HR to ensure that it's feeding correctly to your software? If it's being manually updated, are the transfers or changes being communicated to you? Make sure your audits are set up to capture those issues and are timed appropriately, such as, prior to month-end close, accounting is booking their entries and running their reports. Be aware of that. So that's best practice here is, create and maintain a list of your routine data audits. It may help to see them at a glance. If you know something is changing, knowing where all your audits are, again, at a glance, because there's lots of them and there's different folks doing them, review it, add to or adjust whenever there's going to be a change or in processes or a new issue or error arises. So, all right. Catherine?
And now we'll talk about tax compliance. With the U.S. tax compliance, most companies are already doing their annual review for U.S. tax updates, limit changes. About the same time they're dealing with their 6039s and sending out all their forms. This is also a good time to review any new regulations or guidance concerning mobile employees, international and interstate now that we have to worry about. This is becoming more of an issue. Softwares are working on developing for it, but you have to stay on this issue. You need to set up a team with your HR and your payroll and your legal departments for the annual review of equity tax issues for the U.S. employees. Having a team together to work on these will bring up all the various issues that you may not be aware of or that aren't that important on your side of the process, but are far more important on their side of the process. So work with your teammates for annual updates of the tax compliance. Also, with international tax compliance, it's pretty much the same issues, but coming at it differently because you've got a lot of countries out there that you need to worry about now. Obviously, tax withholding rates, year-to-date limit changes, these happen with multiple different countries. Taxable gain calculations, watch out for this one. Different countries define the formula for calculating the taxable gain differently. For one easy example, Canada. If your grant qualifies for capital gains treatment, or if it doesn't qualify for capital gains treatment, we'll determine a different calculation on what the taxable gain is. You need to make sure your system is giving you the correct final product. Don't skimp and not upload on your year-to-date totals for internationals. Again, using the example of Canada, Canadian province taxes have limits. If you're not uploading that year-to-date, you're not getting the correct final result. Tax reporting scheduling. You can't use one-size-fits-all attitude when it comes to the tax reporting schedule for internationals either. You should have a calendar set up with the reporting requirements and your dates, just like you do in the U.S., but accounting for all of your international payrolls. Mobile employees. Make sure you're updated on the mobile employee rules and what your software is and isn't capable of. Have a plan for how you're going to deal with your mobile employees and review that plan annually for necessary changes. Again, your best practice is to set up a team with your international payroll, your HR, your legal departments for an annual review of what equity tax issues for employees may have come up in each country in each year. Same thing goes for security law compliance. Now, this is often something that is also happening annually, and you may not even be directly involved in it if your company regularly goes out for additional shares every year. If you're one of the lucky few and you have that evergreen provision in your plans, you may not have had your plans reviewed on that annual basis. If you haven't had to go out for additional shares recently, schedule that periodic review of your plan. You're looking for any regulations or guidance changes that can adversely affect your company through the plan's old terms, tax issues, accounting issues. This is especially important with older plans. International employees. What type of grants can they be granted under your current plan? What type of grants can be granted under their own securities laws? Do you need a plan addendum? What different tax treatments are possible? And do you want to go that far with your plan to accommodate different countries' tax treatments? Is it cost effective? What kind of filings will you need? You need to make a schedule for those U.S. and international regulatory filings and add it into that tax schedule that you've got so you always know what's coming up. Your best practice is to create a team with your legal, your HR, and your payroll so you can work together when you expand into each new country and set up new security filings, tax and reporting requirements prior to the approval of the first grant in country or that expansion of the ESPP. I know what you're all thinking, but that's a luxury. They never tell me beforehand. If you are regularly, if you have a team set up and you're regularly meeting, you're going to hear about these things happening. Well, hopefully, and you will be more likely to hear about these things happening before it hits critical. That's one of the best reasons for having that team set up.
Building those relationships is critical. Explaining the needs, the reasons, the ramifications. If you're not, you don't have a chair at the table, if you will, to get part of that discussion. Very important.
I think that is very much your proactive mindset. If you're working with others, you've got your ear to the ground. You're hearing about things. You can get ahead on that stuff.
All right. So proactive mindset, like you said, although the stock plan administrator, whether you're a team or you're just one person, we know you're often stretched for time and wearing multiple hats with an organization. So it's always beneficial to try to have that proactive mindset, which is some of the things that we've pointed out here today. Just a few things to consider or keep in the back of your mind. Is the company looking to expand? And if so, when and where, if international? If you have gradual growth over time, obviously that can mean one thing. But if you're going to make an acquisition and you double your equity award holders or your ESPP participants, that's a different planning. That's a different bringing, folks to the table, getting ahead of it, getting in advance, looking at your resources. Very critical to be thinking of that in advance. And again, building those relationships so that when things are coming down the pipeline, you're made aware of it and you can bring these things up. And as Catherine said, international is especially important. We know the challenges in so those countries, and in fact, the fear of just hearing China safe rumors throughout the equity world when that. Some folks, you guys are great at doing it. Other ones have never had to experience it before. It's a challenge, definitely a challenge. So other things to always be thinking ahead. Do we have the sufficient resources and the automation, for that growth or the complexity? Like we've mentioned during this session, sometimes we're rolling out new programs that are challenging and difficult to manage, if not impossible. Hopefully, if you can get the word in, like I said, doesn't happen. You can be involved in the planning. You can make those suggestions. And especially, sometimes, senior management or other departments don't realize that when they want to put a new program in place, there's no system out there. Our equity platforms can't handle some of the unique twists and turns that they like to throw out there. And they need to understand that it could require, I'm going to have to track all of these manually. I'm going to have to put a spreadsheet together. I'm going to have to build this. Trying to explain that, bringing that to their attention, that this isn't an easy thing to put in place. It's going to require a lot of effort, and there could be errors, there could be issues. So especially critical when, like I said, I know many times they get very creative with our Section 16 folks, and once they find out you're going to be having to track things manually or something else on the side, often they come back and will reconsider things. Not always, but periodically. What was that, Catherine?
There's always hope they'll reconsider.
Yes, always. Like Catherine mentioned, does the company have enough shares in the plan? Don't ever get caught, without enough shares. Raise that red flag, get those discussions started early. Look at your equity grants. Are they retentive? Are they appropriate for the life stage of the company? Sometimes, you as a stock administrator team, have the latest information, whether it be from NASP surveys or other resources. You tend to have your finger on the pulse more often than some. If you do, pass it along as an FYI to others in your organization, whether it be corporate comp or HR or legal teams, whoever is looking at that down the pipeline. Because even though they have their own sources of information. Sometimes we have our fingers on some more current, or what's the best practice? What are people doing out there in the equity world? So sharing that information is always good. Being proactive. The other thing is, do my employees value their equity? Do they really understand it? For example, post-IPO, do employees really know what these new options and RSU awards mean to them? I mean, we expect in this world today that most folks, they've had some equity or not, but that's still not the case for a lot of new up-and-coming companies. And you're the one who has the best view to this, because you're the one who's getting the phone calls, the emails with some of the most shocking questions sometimes. I know my experience, I had a group of employees one time, and I don't know if they all got together and debated or what it was, but they decided they weren't going to accept their RSU awards because they couldn't afford to buy those shares when they vested. I was stunned, I will say. So education briefings, we put those in place. And we not only did that for the participants, but we also did it for the managers. What kind of communication was being, given to those employees when they're getting these awards, these very important, equity, this glue to the company, when they really didn't understand what it meant to them. So always keep that in mind. And lastly, then, engage in the cost-benefit analysis approach. Is it worth it? Doesn't have to be a full-blown analysis, dollars out the door. It's just kind of a way of thinking sometimes, just keeping in the back of your mind. We often naturally do this, but not just you, but also your team. Engaging your team, if you have a team, to be thinking that way and feeling free to bring it up, ask questions. Don't be afraid to say, why are we doing it this way? What about this? Really encouraging that with the team, and then, in addition, even to some of the departments that you're working with, getting that thought process going. So best practice here is keep an eye on the future to avoid those unpleasant surprises. So I think we all want to do that. All right, Catherine.
All right, so about expertise. To set up best practices, you are going to need expertise, and you're going to need it in a wide variety of areas. You want to be able to really utilize the experience and the knowledge of a lot of different people. So you're auditing all this data, you're assessing your best practices, but do you really know everything you're looking for? Let's face it, folks, we don't know everything. No matter how much we would like to be the person who knows everything, we don't. It takes a village. You've got securities law filings, you've got financial experts, administrative experts, tax experts, HR experts. Your best practice is to identify who do you have available for each area of expertise in the U.S. and international. If you're missing expertise in an area, get help from outside. Don't wait until after you have a problem that arises. You should actually keep a list of your areas of expertise that you're going to require and who is covering that issue. If it's, let's just say it's international taxes, okay, I've got that outside legal firm for that. You've got them on your list. I've got securities law issues. I've got, this legal person for that. Hopefully this list will consist of a lot of the people that are on that annual tax review or the annual regulatory review, or just your payroll, HR, legal team. Don't try to guess stuff on your own. Have your list, have your team regularly meet on this stuff so you don't get caught not knowing when you have a problem arise and you don't have anybody to reach out to. You don't want to get into that situation. All right. At this point, we can open it up for questions. Does anybody have any questions out there? Anybody? I'm really not seeing any questions. Shauna, you want to jump in here?
Sure. Yeah. So thank you guys for joining us today. And I'd like to thank Catherine and Laura, who joined us as speakers for today's educational webcast. Please do look for an email in the next few days with links to the recording and materials. And if there are any questions that you think of later, don't hesitate to reach out. The contact information here is on your screen and in that slide deck under the Event Resources tab. Thank you so much and have a wonderful day. Bye-bye.